This is MacroVoices with hedge fund manager Eric Townsend, the free weekly financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. MacroVoices is all about the brightest minds in the world of finance and macroeconomics telling it like it is, bullish or bearish, no holds barred. Now, here are your hosts, Eric Townsend and Patrick Ceresna.
Listeners, you'll find the download link for Patrick's chart deck in your Research Roundup email. Now, if you don't have a Research Roundup email, that means you're not yet registered at MacroVoices.com. So just go to our homepage, MacroVoices.com, click the red button that says Looking for the Downloads, just above Dylan's picture on the homepage. Patrick, sector rotation or bigger correction? Which is it?
Well, I wanted to start off just by looking at page 2 in that S&P 500 chart, because what all of us have been seeing when just looking at the surface is a market that's been relatively flat. The S&P 500 more or less has been trading at the same price level for the better part of 2-3 weeks. And really, it looking just feels like the market is pausing, but there's something really big happening under the surface of the market. And I really wanted to use this chart book to kind of explore how there's this rotation happening and what conditions would change in order to make this into a bigger market correction. And so on page 3, what I have here is just a chart of the NASDAQ with that 50-day moving average on there. Really, I wanted to just use the 50-day to kind of highlight where the average price is and just to show the magnitude of the pullback on a relative basis. And what we can see is that while the S&P has been flat, the NASDAQ has been correcting over the last week, and we've more or less approached even close to a 50% retracement of that March-April rally. And we have the NASDAQ selling, and it's happening actually in a number of the subsectors within there, and particularly on page 4, when we look at this is the FANG futures, which is all of the big behemoth tech companies like the Apples of the world in this ETF. And what's particularly interesting about the FANG stocks, that in spite of strength in Google and Facebook, we have not seen the FANGs in April manage to make it back to their previous highs the way the NASDAQ and the S&P has been able to. And more importantly, these FANG stocks have now fully rolled over and are trading well below their moving averages. And so we're continuing to see weakness in this tech space and distribution really coming in there. And that story continues. When we go to page 5, we can see the SPAC ETF. And the SPACs have been one of the hottest bubble sectors in the market in the late last year going into the first few months of this year. And really since the February high, most SPACs have had a substantial and deep mean reversion, and they certainly have stopped really driving any of the momentum behind in this market. And we continue to see rotation out of there. And so this theme continues. For instance, on page 6, when we talk about those stocks that did incredibly well when COVID came around and we had the big lockdowns, and so the Pelotons and the Zooms and all of these other stocks associated with everyone staying home and locking down, it had extraordinary runs in the summer of 2020. But I'm just using Zoom's chart here, but whether you're talking Peloton or any of these other ones, they have just been outright selling, and there's been full-on distribution in this entire space. And even another sector that's been aggressively distributed has been the social media space. I'm using here the social ETF, SOCL, and this social media ETF has really failed to be making higher highs and just been rolling over. And so we have this, while it looks like this S&P is holding up, what's really interesting is that this entire kind of tech space and NASDAQ space has really just stopped getting any money flow, any rotation. Even like ETFs like Cathie Wood's ARK investment has just been incredibly weak. Tesla has been incredibly weak. All of these stocks just have run out of all momentum.
Well, Patrick, something's holding this market up. So if those stocks are running out of momentum, let's take a look at the various different sector ETFs and figure out what's actually holding the market up. Let's start on page 8 with the value ETF.
Right. And so one of those things, I mean, we talked about it last week when we were talking about momentum versus value when Charlie was on. But really, I wanted to just highlight the actual value factor ETF, the VLUE. And what we continue to see is that the value stock basket continues to make 52-week highs and continues to get a momentum to the upside. As well, a space that has truly been some of the leadership is on page 9 when we're looking at the metals and mining ETF, the XME, which is broken decisively to a fresh high. And whether you focus directly into spaces like uranium, or whether you go into those copper stocks, or you go zinc, or any of these other basic material metals, they've all just been doing incredibly well and continue to get substantial amounts of rotation as commodities such as iron ore commodity or steel or copper all are making fresh highs in this cycle. Now let's move on to page 10, where there's another sector that has been doing incredibly well and taking quite a bit of rotation of the money, and that's the SPDR Financial ETF, the XLF. Even when you're looking even at the KRE, which is the regional banks ETF, the financials also continue to get substantial rotation, and they continue to plug 52-week highs. And so while the S&P 500 is holding up here along these highs, under the hood, there's a very big rotation underway, and it doesn't seem to be slowing. And so really it's about what is the right sectors to be in order to be making any performance in this market environment. Another place that's been incredibly hot on page 11 is looking at the home construction ETF, the ITB. Obviously, lumber prices have just gone absolutely parabolic to the upside, but that doesn't seem to have slowed down these home construction companies, which continue to just plug along, doing very, very well, and including the energy space, which on page 12, we have that SPDR Energy ETF, which is the XLE, and it's almost right back to those 52-week highs, ready to break out. And so the theme really continues to be that value and cyclical and financials are all getting all of this money flow, and anything associated with tech and FANG and SPACs and any of those things that were incredibly hot late last year into the start of the year continue to be actively distributed. And so back to the very question that we were asking at the very first slide, is this a sector rotation or the start of something bigger? I actually think we have to not take our eyes off of these value and cyclicals, because they're very mature, and this move is already quite overbought. And I'm not trying to predict that they're imminently going to stop going up, but in order for this market to turn into like one of these bigger market corrections where the S&P 500 starts to really sell and mean revert at this big correction, we would need to start seeing highs coming in some of those cyclical spaces. And there's no sign of that yet. And so that's certainly something that I think we have to watch in the next week or two as to whether that space starts running out of momentum on the upside or whether this rotation just continues.
Well, that's what we need to watch. And for any listeners who want to watch it closely, you can get Patrick's service every single day, not just once a week, by signing up for a free trial of Big Picture Trading at bigpicturetrading.com. The information is on page 13.
That concludes this edition of MacroVoices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. MacroVoices is made possible by sponsorship from BigPictureTrading.com, the Internet's premier source of online education for traders. Please visit BigPictureTrading.com for more information. Please register your free account at MacroVoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the internet each week. You'll also gain access to our free listener discussion forums and research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at macrovoices.com if you haven't already. You can subscribe to MacroVoices on iTunes to have MacroVoices automatically delivered to your mobile device each week free of charge. You can email questions for the program to mailbag@macrovoices.com, and we'll answer your questions on the air from time to time in our mailbag segment. MacroVoices is presented for informational and entertainment purposes only. The information presented on MacroVoices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on MacroVoices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. MacroVoices, its producers, sponsors, and hosts Eric Townsend and Patrick Ceresna shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on MacroVoices. MacroVoices is made possible by sponsorship from BigPictureTrading.com and by funding from Fourth Turning Capital Management, LLC. For more information, visit MacroVoices.com.